President Trump's big, beautiful bill is expected to pass this week. So do I believe that's going to pass this week? I believe yes, that it will. Now, I want to show you the highlights of what is inside this bill because a lot of modifications were actually made in the Senate version. Okay, so first, I want to show you this video clip summarizing what President Trump promised of what's going to be inside this bill, and then we can use that to compare what we actually got.
So these are the tax priorities of the Trump administration that the president has laid out for members in that meeting today. No tax on tips, which is obviously a very public campaign promise that the president made. No tax on seniors' Social Security. No tax on overtime pay. Renewing President Trump's 2017 middle-class tax cuts. Again, these are the president's priorities. Adjusting the SALT cap, eliminate all the special tax breaks for billionaire sports team owners, close the carried interest tax deduction loophole, tax cuts for Made in America products. This will be the largest tax cut in history for middle-class working Americans. The president is committed to working with Congress to get this done.
Okay, so we're not going to go in any particular order, but we're just going to focus on the tax aspects of this bill outside of the renewal of the previous Trump tax cuts. Okay, so we're going to start with this one. You will now be able to deduct up to $10,000 in car loan interest annually. And this is going to apply from tax years 2025 to 2028. So once you start making more than $100,000 as a single person or $200,000 as a married couple, then this deduction will get reduced. And this is only going to apply to passenger vehicles that had their final assembly in the US. Now, for the no tax on tips, here are the details. Tipped income will be tax-free up to $25,000. So this no tax on tips will be in effect from tax years 2025 to 2028. Now, regarding the no tax on overtime pay, the final version is this. Overtime pay will be tax-free up to $12,500 per person. So this will be in effect from 2025 to 2028. Now, for both of these, no tax on tips and no tax on overtime pay, it's going to be very straightforward. It's going to be in the form of a tax deduction. So I want to help you just visualize the situation. So I brought props to help explain the situation. So let's just say that your base salary is $100,000 a year, and that's represented by this $100 bill. And let's just say that you receive tips at your work, and you get $10,000 of tipped income. $10,000 of tips, basically. And that's represented by this $10 bill. So this is your total income for the year. And this is what you're going to report on your tax return. You're going to report that you made $110,000 for the year. But then this tipped income, so these tips, this tipped income, you're going to get to write that off. So basically, you're going to report the $110,000, but you're going to deduct $10,000, and then you're just going to have $100,000 of taxable income. So it's going to be the same thing with overtime pay as well. If your base salary is $100,000 a year and you have $10,000 of overtime pay, then you're going to report $110,000, but you're going to deduct the $10,000 of overtime pay, and you're just going to be left with $100,000 of taxable income. So that's how it's going to work. Okay, now moving on. Senior citizens ages 65 and up will receive a $6,000 tax deduction boost. So essentially, your standard deduction is going to be increased by $6,000, and this is going to run from 2025 to 2028. So the House of Representatives originally wanted to make it a $4,000 tax deduction boost, but now it's going to be $6,000 after the Senate version. Okay, so this is the story. President Trump, as you saw, wanted to make Social Security income tax-free, but this was not allowed in the way that they're trying to pass the bill. So therefore, you can think of this as an alternative to make good on the promise that he made. Now, is this the same thing as what he originally promised? And the answer is no, it's not. However, will this cause Social Security income to be tax-free for many Americans? And the answer is yes, it will. Now, for the state and local tax deduction, so this is also known as the SALT deduction, I want to show you the final details, the final version. So the current rule, so just looking back at tax year 2024, so the current rule is that you can deduct up to $10,000 in state and local taxes. So that's the combination of your state income taxes that you paid, your property taxes that you paid, locality taxes that you paid, etc. Now, for tax year 2025, you're going to be able to deduct up to $40,000 instead of just $10,000. So you can claim this deduction if you make $500,000 or less. And this deduction amount, it's going to be slightly modified until 2029, until it reverts back to a $10,000 cap. Now, regarding the child tax credit, it's currently at $2,000 per child. So this is just the CTC. We're not talking about any additional amounts. Okay, so the House of Representatives, they wanted to increase it from $2,000 to $2,500, but have it run from just 2025 to 2028. Now the Senate, they wanted to increase it from $2,000 to $2,200, but they wanted to make it a permanent thing. So the Senate version is the final one. Therefore, the child tax credit is going to increase from $2,000 to $2,200 per child, and that's permanently. Now, regarding Medicaid, certain recipients ages 19 to 64 will need to either work, volunteer, or enroll in school or job training programs at least 80 hours a month to qualify. So Medicaid eligibility it's also going to be restricted for certain immigrants, and that includes refugees. And states that offer health coverage to undocumented immigrants will be penalized. So listen, these were some of the highlights of the bill that we were previously tracking over the past few months. But of course, there's so many other issues in this bill, which I'm sure that you've probably seen, ranging from defense to immigration to clean energy to corporate tax breaks for depreciation. But again, we're just focusing on the highlights on, what we cover on this channel. Now, President Trump says that he wants this bill on his desk, ready to sign, ready for him to just put into effect by July 4th, which is actually this week. So the current situation is that the House of Representatives passed this bill, and then that bill got sent to the Senate, and then the Senate made modifications to the bill. So the Senate just cleared major procedural items to advance this bill, of course, in the Senate. And now it's going to be voted on very shortly in the Senate. And after it passes in the Senate, it's going to be sent back to the House of Representatives. The House can make changes, but that's unlikely to happen. So once the House of Representatives votes on it and passes it this week, which is expected to happen, it's going to be on President Trump's desk to sign by July 4th. And just so you know, not a single Democrat was in favor of this bill. However, the Republicans were able to pass this bill because the Republicans control the House, the Senate, and of course, the presidency. But it was the same thing with President Biden. The Democrats were able to pass the Inflation Reduction Act without a single Republican vote. Because at that time, the Democrats controlled the House of Representatives, the Senate, and the presidency. Now, with that being said, I want to show you the perspective, the point of view, from the Republican side as well as the Democrat side. You can let me know what you think as well. But I just want to tell you this, this is a disclaimer that some Republicans, they despise this bill. Some Republicans don't like this bill. And there's some Democrats that support this bill. So I'm not talking about the politicians in Congress. I'm talking about us, we the people, Americans. But let's start with the Republican side.
We are making good headway on the reconciliation bill. As you all know, this is the legislation that we believe implements the president's agenda and makes our country safer, stronger, and more prosperous. And if you look at how it achieves those objectives, and certainly in the tax side of it, it makes it easier for American families to make ends meet by giving them significant tax relief in several ways. It locks in and makes permanent the lower tax rates that were part of the Tax Cuts and Jobs Act. It allows for a permanent extension of the expanded child tax credit, and it also makes permanent the increased standard deduction, which 90% of the people in this country claim. And then on top of that, a number of President Trump's initiatives deal with no tax on tips, no tax on overtime, lower taxes on seniors in this country, and no tax on interest on new loans for cars. So those are all things that the President has included. They're included in our package, they were included in the House package, but we think they are important in terms of the message they send to the American people, and that is that we want to allow you to keep more of what you earn so that you can spend it and make decisions that are in the best interest of your family instead of sending that money to Washington, D.C.
And now I want to show you the point of view coming from the Democrats, so please take a look.
I want the American people to understand exactly what's happening right now with Senate Republicans and their so-called big, beautiful bill. Senate Republicans are trying to pull a fast one on the American people. For weeks, they've struggled with the reality that most people hate this bill. Leadership has struggled to secure votes among their own ranks who know how bad the bill is. And now they've scrambled to meet an entirely arbitrary deadline. So what did the Republicans do late last night? Hard to believe. This bill is worse, even worse, than any draft we've seen this far. It's worse on health care. It's worse on SNAP. It's worse on the deficit. At the very last minute, Senate Republicans made their bill even more extreme to cater to the radicals in the House and Senate.
Okay, so there you have it. Please let me know what you think. Please subscribe. I'll keep you updated on this whole situation. Thank you for the support, and I wish you a very nice day. Take care.